Oh, what a glorious day. Oh, what a glorious day. Sing it with me, please. Dude, I'm so freaking stoked. I kept saying that the stock market, hedge funds, Wall Street, everyone was being way too irrational and fearful when it comes to Salesforce and treating it like it's a dying business. But friends and family, take a look at your screen right now. They just posted their earnings this past week. They're up 13% into the green in the past 5 days. Are you freaking kidding me? The S&P 500, on average, usually the total return in a fiscal year, 10, maybe 12%. 13.8% in the past 5 days. But that's being manipulative because if we zoom out year to date, past 11 months, we're talking about a negative 21% into the red. So if you only take a look at the snapshot of what's happening in recent days, then of course it looks like a phenomenal stock. But we don't want to focus on the negative. As a shareholder of Salesforce, can we just stop right here, reflect, look at this glorious, glorious past 5 days for ticker symbol CRM. I mean, you might as well spit in my face and call it a special dividend. I'm in a pretty solid mood. So if you don't get it already, this is going to be an update video for Salesforce. We're going to be going over their most recent earnings report, and I'm going to give you my updated price targets because now we have more information to work with. And then towards the end of the video, I'll share with you my position in Salesforce. And here's a spoiler alert. Salesforce makes up about 20% of my portfolio. So my conviction level is pretty darn high. United Health is also about 20%. So if that sounds good with you, let's go ahead and get into it. So as I alluded to in the beginning of the video, this past week they posted their earnings. What exactly is the earnings? It's when a company gives you a situational update to their financial performance in the past 90 days or 3 months, and they also give you an updated revision guidance going forward. So the earnings is really freaking important, and that's usually when a stock has those really big swings either into the green or into the red. And I kid you not, to be fully transparent, dude, I had sweaty nipples going into that earnings because in the back of my mind, I knew that if it was anything short of spectacular, like I'm talking about dropping a turd that's covered in gold glitter, they were gonna go down 10 or 20% into the red. But friends and family, Salesforce not only beat the expectations, but they even raised their full year guidance. It was so freaking good across the board. I seriously can't see any blemishes except the fact that their Asia Pacific market, it wasn't growing as expected, but everywhere else, it made up for it. And to get into the specifics, Agentforce, which is the all or nothing growth catalyst right now for Salesforce, it's their AI task manager. The bottom line up front is that it's selling like TVs during Black Fridays in the early 2000s. Everybody that they're partnering with, if they already have a Salesforce enterprise contract, they're upselling the Agentforce into an existing ecosystem, and everyone's just like, you know what, why not? Well, I'm talking about their AI revenue. It went up by 114% year over year. So when I say that this is their big catalyst, it's a pretty big growth driver. And everything else, their Tableau, their CRM platform, their group messaging app, Slack, everything went up year over year. There's not a single line of business that is stagnant or is declining. So pretty freaking bullish about Salesforce, man. And about 2 weeks ago, they just acquired Informatica, which is a cloud data management company, and they're going to integrate it into their existing ecosystem to organize and unify all of the customer data from every line of business in an organization. So these guys, the AI is not making them irrelevant or obsolete. Now, as a guy that used to work in corporate America, I will say right now that Salesforce, I don't exactly like their products, but there's no better alternative. I mean, that was a complete lie because they do have some competition from Microsoft, Dynamics 365, SAP, which I believe is a German company, Oracle, Zendesk, but it's the exact same reason why I invest into Cisco as well. I understand that Cisco's not the best IT infrastructure company out there. They have a lot of competition, but once you're into the hands and the pockets of corporate companies, it's hard to move contracts and pivot into another software or IT company. Understanding that, I'm like, okay, Salesforce, they already have the contracts, the trust, and the relationships with almost every single Fortune 1000, S&P 500 company. I think the recurring revenue is going to be consistent. Can they lose some market share here and there to Microsoft or to Oracle? Yes. But at a large scale, probably not. Now, having said all of that, I mean, I'm not oblivious to the fact that leading up to the earnings, Salesforce on a day-to-day basis, they were going on a small little sell-off day by day, week after week. I think Wall Street and everybody else is kind of like, I feel like this company is done. I feel like this company is over. And then they come out and post a earnings like that, or they just smash through the roof, like a 2011 house party. I feel like the younger generation, they don't even understand what a rave in a warehouse or a house party is like. But then again, I feel like the folks that grew up in the 80s, they probably say the exact same thing about us millennials. Okay. But anyways, let's go ahead and talk about the updated price target for Salesforce. What's the inherent worth of this company based on the information that we now have? So what you see on your screen right now, Q1, they executed $1.59 of profits per share. Q2 was $1.96. And this is what they just reported. And this is on a GAAP basis. Salesforce and some other food CPG companies, they like to talk about their adjusted EPS, but that's not what is listed on the income statement. So when you take a look at their EPS on stockanalysis.com or Yahoo Finance, you're not going to see the adjusted EPS. The PE ratio is not predicated upon the adjusted. It's always going to be based on GAAP, the generally acceptable accounting way of doing things. So we're going to go with GAAP. And something else that's worth calling out is that I put down 2025 because that makes sense, right? We're operating in reality. It's still 2025. However, for Salesforce, their fiscal year, their calendar is 2026. So they posted their Q3 2026 earnings this week, and their guidance for Q4 is going to be roughly $1.49. And I think the Informatica acquisition is kind of throwing off their numbers, so it looks like they're not generating profits, but I think it was a pretty sizable chunk of their money that's going towards the M&A, and that's why it's hitting their bottom line, but I'm not too worried. If you understand that the company just spent a crap ton of money to buy out another company, then you know that it's not too fearful and it's a one-time kind of a thing. Anyways, $1.49, that adds up to their full year EPS being about $7.23. Now, in the earnings call, the leadership team said on a GAAP basis, they're saying their full year EPS to be $7.24. I'm proposing $7.23. Now, if that is the case, and they trade at a PE ratio that's closer to a 40, because right now I think they're like at a 35, and some of you might be like, dude, that's way too high. They're too expensive. They're trading for a premium, but I want to stop you right there. Because in the past 20 years, on average, their PE is usually about a 90. And if you think I'm a sack of crap that's lying through his filthy little mouth, I'm not. Past 10 years, on average, their PE is a 107. The past 5 years is 155. I feel like that's a little distorted because I think that's accounting for 2021 and 2022 when all of the growth companies, their valuations were just way too high. So for me, I want to bake all of that in for the past 20 years, and I'd rather go with their 20-year average, which is a 90. If we only consider the past 3 years, 147, the trailing 12 months, a 41.8. Right now, they're roughly a 35. Maybe we can meet in the middle and say like 39 or 40. And that's the logic behind why I'm proposing a 40 for their valuation. And if that is the case and they execute $1.49 for this quarter, then Salesforce could be $289 a share, which means the upside from what they are right now at about like 260 or whatever to 289, not the highest, but theoretically they are undervalued. Now, if they go back up to their 20-year historical PE, which is a 90, then Salesforce could be 650. Do I see that happening? Absolutely not. I don't see that happening. I think somewhere between like 280 to like 350 is more likely, right? Somewhere like a 310 to 315 is what I think Salesforce is going to be in the next 3 months or so. However, what we do want to keep in mind is that they never just hit the projected or forecasted bottom line per share, which is the EPS. They never. They always beat, right? Well, sometimes they do just hit or come in a little under, but for the most part, they beat and then they revise their guidance and go higher. So, having said that, let's just go ahead and assume it's not going to be $1.49 for this upcoming quarter. And let's say they post something like $1.61. So we're spitballing here. So the EPS is going to be $7.35. PE at a 40, then Salesforce could be $2.94. However, I don't want to be too rosy. I don't want to be too optimistic. I want to see the worst case scenario. And let's just assume they're going to hit $1.49. If we continue to play this game, and I'm projecting a growth of about 20% from 2025 going into 2026. I do this because for us it's 2025, but for Salesforce it's 2026. Then next year, their EPS should be around $8.68, which I definitely think they can execute and pull off. Then next year, so about 14 to 15 months from now, Salesforce, their valuation should be about $347. And at their current price point, I think the upside from $260 to $347, I think that's good. That's a significant amount. And as a reminder, about a year ago, December 6th in 2024, they were $362 a share. So I'm being pretty cautious. I'm being bearish as I am forecasting and calculating these numbers. And if we go on into 2028, which is Salesforce's 2029 fiscal calendar year, and they generate $11.17 in their EPS, and it's only a growth of 12% year over year, and they continue to trade at a PE of about a 40, then they could be 446. However, if the narrative changes surrounding Salesforce, and I don't know, they become the next leader in the AI movement, and their PE gets ballooned up to like 75, they could hit 838. To be honest with you, I don't think that could happen, but I think somewhere in between 446 to 838, somewhere around like 550, maybe 600, seems to be more likely. So that's what I see happening. So as of right now, I definitely think Salesforce is undervalued. When it comes to the compounder chart, I'm not going to move them down or up. I definitely still think they're a B tier type of company right next to United Health, Oshkosh Corporation, and Waste Connections. But do keep in mind that I'm a special type of stupid, because while everyone else is bearish towards Salesforce, I'm pretty bullish about them. And we can also toss in Adobe as well. I feel like Adobe is going to have their comeback coming up soon. I'm calling it right now. I think their earnings is next week or in 2 weeks or something like that. I think they're going to crush it. So I think they're the next one that's going to have their little rebound rally. Everyone here on the left side, pretty bullish about. Everyone on the right side, I'm kind of like, eh. So when it comes to Salesforce, what am I going to do? Now that the shares have popped and their future guidance is bullish, what should I do? Should I double down? Should I dollar cost average? I mean, before we get to that point, just take a look at their numbers, right? This is consistently and reliably growing quarter after quarter, year after year. And what you see on your screen right now is their top line, their gross sales, their revenue. To generate $10.2 billion in 90 days, dude, that's just spectacular, man. Does this look like and sound like a company that is dying and is stagnating? I don't think so, guys. I think the growth story for them, it's not over. And when we jump on over to their balance sheet, what are we working with? $11.3 billion of cash on hand. Obviously, they had to utilize quite a bit of it to buy out Informatica. How much was it? I think it was like $8 billion or something like that. But anywho, if we take a look at their total debt to see how leveraged they are, they have $11.6 billion of loans on the books, and it's been going down steadily since 2021. I feel like every company that had half a brain, they took out a crap ton of loans in 2020, 2021 because the interest rate was like non-existent. And that's why as a business enterprise, I don't blame them. Wouldn't you want to double down and take out more loans when the interest payments are only like 1.5 or 2%? You should do it then rather than waiting when the interest rates are so freaking high. Now you have to pay a 9% interest rate, right? But it is good to see the trend of it going down year after year. Jump on over to their free cash flow. This is a company that is guilty of doing a crap ton of stock-based compensation. It just consistently and reliably goes up. I would like to see this figure be more flatlined, which in 2021, it was $800 million of stock-based compensation, and it's roughly $800 million stock-based compensation. So it is stagnating, but that is something to be mindful of. And if we take a look at their free cash flow situation, what are we working with? Oh my goodness, you tell me, is this a disgusting or a beautiful company? I mean, the product aside, I'm not a fan of their product. I really am not. But the numbers don't lie. I mean, this is just really beautiful, right? I think that was one of the main reasons I started to buy into and dollar cost average into Salesforce. I mean, that's just beautiful. 2018, we're talking about $2.2 billion of free cash flow. Now we're at $12.8 billion, and it only seems to go up. And if we take a look at their metrics of all their different lines of business, every single category is going up, and that is to include the various regions of the world. And remember how I said Asia Pacific, it's kind of slowing down? Well, it's going from a 13.9% growth quarter over quarter, year after year, to down to 9%, but it's still growing 9%. And the North America one, I think, can be explained because at this point, they pretty much penetrated every major enterprise. So I think the growth story now is overseas, but also upselling Agentforce to their existing customer base. And so what is my game plan when it comes to Salesforce? I'm going to show you my position as I talk about what I'm going to do next. So if I scroll on down right here, I have 46 shares of CRM, about $11,000. That's my cost basis. Now it's just shy of $12,000. 19.2% of my portfolio. My total profit, I'm 8% into the green. And on a per share basis, we're talking about $241. Right now, they're $260. I feel like the momentum has changed for them. They're slowly going up. So what am I going to do? Well, I mean, this is not a sexy answer, but I just plan on holding on. Reason being is that I truly see Salesforce as the next Microsoft. I think right now they're going through a little bit of a speed bump with all this AI narrative saying it's going to make their business model obsolete. But it's not like they're allergic to AI. They're integrating Agentforce into their ecosystem to have AI do all of the heavy lifting when it comes to analyzing data or numbers or customer data that's in your books, right? So when I think about Salesforce, I'm personally bullish. Yes, I know that their numbers, it's not as aggressively growing as it did in the past, but it is just shy of a double-digit growth rate of 10%. It's like 8, 9%. I'm pretty happy with that. And another reason why I'm holding on is right now they're 260, and I feel like the upside, there's so much more to go because their inherent worth as a company, I truly think they should be around 285, 290 on the bear side, but 3 to 3.5 months from now, I do think they can flirt with $310 to $320 a share. So why would I sell at 260? And to be even more ridiculous and delusional, I think in a few years, easily could be 450, 550 a share. So to sell it at 260 and to miss out on that compounding effect, for me, I'm like, I'd rather just sit still. Because, I mean, leading up to the earnings, I was pretty much in the red, right? Salesforce, they traded down to like $250, $240, $230 a share, and I didn't do anything either. I mean, I dollar cost averaged when they were $230, but yeah, that's what I plan on doing. So what do you think? Are you bullish, bearish? Do you like Salesforce? What are you going to do? I personally am not going to dollar cost average. I'm just going to sit still and let my shares ride higher. Now, obviously, they could have a pullback. Obviously, there could be a market-wide sell-off. But I do think this is where the tides have turned, and they're finally going to rally back up. This is what I think is going to happen. Now, having said that, I appreciate you for watching the video all the way through. I love you guys. Stay safe. Good luck in the stock market, and I will talk to you next time.